And you may be mistaken for, thinking that this is a place where we are talking about sports, etc. We will be talking a lot about that.
We
the stock
absolutely
market
are.
is equally exciting. What we'll do is we'll talk to Abhiram Eleswarapu. We'll talk about his views on cricket as well. But before that, Abhiram, your thoughts on the market? This week has been good for us. The last couple of weeks have been good for us. Global, markets look like they're getting better as far as the sentiment is concerned. What do you think the pitch report is, so to say, for the markets?
Well, the pitch report is that it's a fairly neutral setup at the moment. If you see quite a bit of the exuberance in the market recently has come back as a result of falling yields, especially in the US, where they were touching nearly 5% and then kept falling all the way down to 4.5 or thereabouts now, be 4.4. And quite a lot of the movement, especially in the US market, was based on that movement. And you see growth stocks outperform quite a bit. In fact, if you see, that's been the trend for this year. Growth has done really well across the board. And somewhat relatively lower quality has also done very well. And that has been the trend so far. But going ahead, we think that index valuations are looking kind of neutralish at the moment. They're reasonably full, maybe not overly expensive, but reasonably full. And that tells me that we're in for a little bit of a pause in the near term, something that we started to see already in the US at least.
Okay, pause in the near term. I hope that's not the word you use for India, Abhiram. You've had a great run, right? 10 on 10. Are you a cricket watcher? Are you rooting for the team?
Well, I guess just as the rest of the country is, I'm a massive cricket fan. I'm looking forward to the final.
Sounds good. Sounds good, sounds good. So the spirits are high for sure, as is the Josh. But to just come back to, today's big news, and obviously we've all been discussing ad nauseum this move from the Reserve Bank of India and sort of the way it's playing out in the market. What's really curious is this immediate trade, which seems to be, sell lenders, buy the non-lenders, by which I mean these asset management companies. Look at HDFC Life, up 3-4% today. All the life insurance or even general insurance companies, they're up and about. What do you think? A, what do you think of the non-lenders? And B, more importantly, I mean, for the lenders itself, does that change your short-term approach or thought process at all?
Well, let's step back and take a look at what the RBI is trying to do here, at least from where I sit. It looks like there is some sort of a clamp down on indiscriminate lending, especially on the unsecured side. Now, there's also a positive to that. It tells you that demand for credit is still extremely healthy, and that underpins some of this movement. Now, if you see the performance year to date of, as I said earlier, of relatively lower quality, has been pretty strong. NBFCs have done really well, whereas the large cap banks have not done quite as well. So a reversal of that trade is actually very likely. And fundamentally speaking, the larger banks and larger NBFCs are obviously much better capitalized to deal with such a situation. So the reversal in trade is not really surprising. And I've been kind of also talking quite a bit in the past about insurance companies and AMCs are spaces that we like. They all fall into the affluent India theme that we've been writing about. So this reversal doesn't really surprise me at all. Quite a bit of it has also got to do with the fact that those stocks have significantly outperformed, and it's time to give away some of that outperformance.
Hi, Abhiram. Good afternoon. Nigel on this side. Good to see you. And when you talk about insurance companies, the large one in there is what you like as well, LIC, the big underperformer, and now you believe valuations are attractive?
Well, I think I like the insurance space broadly, but if you look, and we focused more on the private players, of those, many of those stocks have bounced back from their lows in March. Now it's time to be a little more selective. Maybe of the three, we're looking maybe at the top one or two names to play the insurance theme. So that still remains. And remember that this is a long-term structural story that we've been talking about. So that doesn't change. And if you see globally, most indices around the world, the large indices have a lot more insurance.
So Abhiram,
as a weight.
Abhiram, just to clear it, it's the private sector insurance companies, not the public sector.
Yeah, private sector is what we're more focused on. That's correct.
Okay. No, I just wanted to clear it whether or not LIC was featuring in the list. Now, besides that, the Indian economy itself, it seems, is seeing a bit of a K-shaped recovery, right? The urban consumption seems to be strong. Rural India is, still struggling. But the hope is that maybe we're bottoming out there. any themes you're looking at playing? Maybe the the rebound of rural India, or maybe the continuation in terms of spending in urban India?
Well, if you just look at the results that have gone by, broadly they've been in line to maybe mixed somewhat. But if there's one thing that played out through this theme, it's about affluent India. So companies that sell to the urban rich have done really well, and those that have sold to other parts of the economy have not done quite as well. So if you look at consumption as a theme today, what is really selling in the market? Jewelry, four-wheelers, real estate sales, things like that, which obviously appeal or within the basket of the affluent India. Now, that theme we think will continue. It's not just for the next few months or the quarters. We actually think there's a long-term theme that will play out. On the other hand, we haven't really seen a significant improvement on the rural side. I mean, of course, there'll be some green shoots. For example, if you take a look at two-wheeler sales through this festive season, they have been very strong. But there is enough evidence to also suggest that a lot of that could have been bunched up demand because consumers kept postponing their purchases till the festive season. So if you see what the YTD numbers may look like for two-wheelers, they may still be in only low single-digit growth. So therefore, I'm not convinced yet that that we are away from this K-shaped theme. I think we still remain in that, and it's a good way to build the portfolio over the long term also.
Positive on the IT space from a long-term standpoint. What are your thoughts on that one right now?
So IT, we've been holding on to that for a while. The index itself is probably marginally outperformed the Nifty year to date. And that's fine. That's something that we expected. You see, what's happening in IT companies today is they're all still sitting on very solid order books. And now we're talking about yields in the US starting to fall. Usually that benefits tech names and would also probably rub off on Indian IT names. But if you see in terms of pure demand and execution, what companies have been highlighting is that the real pickup is probably likely in the second quarter of next year, which means that we're probably looking at another quarter, that is this ongoing quarter, which may not be the turn of execution at least. And that's not surprising. This is usually the quarter where you have furloughs and holidays and so on and so forth. So I don't think investors are expecting a big uptick right now either. So it's going to be much more a 2024 theme. Stocks have done okay so far, but remember that these are still quality companies. Quality has underperformed year to date. It is a space to remain invested from a long-term perspective.
Are you not then in the camp that this weakness that we're seeing in IT is structural? You're just saying that this is cyclical, because a lot on the street also believe that maybe the kind of outperformance that we've seen from IT names may not sustain, given the nature of technology having changed from the erstwhile large IT companies to a lot of other specific niches. So there's nothing structural about this slowdown, according to you.
I mean, there are two elements there, structural and cyclical. Part of the cyclical nature of the uptick was also because these companies benefited significantly through the COVID period. Maybe they're giving up some of that benefit. But from a structural standpoint, companies are still growing at high single digit, low double digit. That is significantly faster than what tech spending is globally. So they're still gaining market share. That's really the conclusion from there. So I really do not have any structural concerns about the space. Now, in terms of whether they should give up some of this because of new age technologies coming in or the nature of tech spending changing, I actually believe that Indian companies are very well off in such a scenario, because at the end of the day, their strength is to be able to adapt to new technologies and provide expertise and people who can actually deliver on those projects. So if at all there's a need for skilled manpower in a new technology regime, it's now. And therefore, I find it difficult to think that Indian companies will not benefit in this. In fact, time and again, we've seen that every time there's been a change in the tech regime, Indian companies have actually gained market share and not lost it. So I'm still firmly in the camp that they're structurally strong players.
Okay, all right, Abhiram, thanks so much for stopping by. I appreciate you joining in and giving us, all your thoughts. And hopefully the next time when we chat, we'll be world champions yet again. So we'll wait for that. Well,
I hope so too.
Yeah,
Thank you so much.
Very good. Lifting the cup. Let's move back to the markets then.